There are some Bitcoin proponents that use that same line of reasoning and say we shouldn't call it money, we should call it something else. And there are other Bitcoin proponents that would disagree with them. Whether or not something has the functionality of money versus whether or not it's currently used widely as money at the current time. So, for example, fine art, even regardless of whether people are using it as money, there's no world where it could be used as money, at least without abstraction and credit, things like that. It just the physical properties aren't there. There's a reason why gold and silver evolved as money, and most other things did not, because they actually have intrinsic attributes that make them better monies than other things. And so Bitcoin was, first of all, it was designed to have monetary aspects, and two, it does have monetary aspects.
Bitcoin just stormed back hard. After dipping to $114,700 last week, it surged past $119,000 as of July 28, 2025, sparking renewed debate. Will it test the $123,000 resistance or face a pullback? This rebound reflects rising confidence amid market instability and regulatory chatter. Forget the charts. Bitcoin's real story runs deeper than candles and trend lines. Behind every price surge lies a powerful truth. Bitcoin wasn't just built to be used. It was engineered to endure. While critics argue it's not money because you can't swipe it at the corner store, they miss the point entirely. Bitcoin isn't chasing fiat's broken definition. It's redefining money from the ground up. Some call it the ultimate balance sheet weapon, rescuing corporations and households alike from inflationary decay. But the real kicker? Bitcoin nails all 6 timeless traits of sound money. It's durable, portable, fungible, scarce, divisible, and instantly recognizable. And it does all that without ever existing in your hand. Alden has argued that the conviction around Bitcoin's design and rising demand reflect a fundamental shift. It's not about who spends it, but how it's built and validated. Analysts remain split on whether this price rally continues, but one thing is clear: Bitcoin's resilience underscores its role as an emergent monetary asset. This nuanced case was fleshed out in a deep-dive interview on Market Disruptors with Alden, where she explores Bitcoin's technical foundation alongside market cycles and macro drivers. Watch highlights from the interview to learn more about Alden's chat with market innovators. Please like this video, subscribe to the channel, and enable post alerts for more sharp market insights. Enjoy the video.
I would argue that shifting technology changes where the power lies, or maybe more specifically, how much power is concentrated, because there are certain asymmetries that form and then go away. So we can examine those claims kind of around the margins. One is that there are existence of smaller countries that get dollarized. So basically, their currency is either one so mismanaged that basically people have no choice but to default to something else, and the government really kind of loses its ability to say stop using other monies, only use our monies, because it's so unworkable. Or in some cases, there are politicians that come up and say, we've managed the currency so bad, we're just going to stick with basically the dollar, or whatever the case may be. And so around the margins, there are already places that do that. And then there are even wealthy countries. I mean, there are certain parts of Switzerland that accept Bitcoin as tax, for example. You can pay your taxes with it, and otherwise it's endorsed. So around the margins, we know that while it is true that most governments will do their best to impose a currency, it's not unheard of for it not to be the case. In addition, we exist right now in like a 54-year period of global fiat currency. And so before then, there was some sort of tether to precious metals, mainly gold. And we don't know what the future is going to look like another 54 years from now. So this experiment that we currently exist in is still relatively new. And of course, every generation kind of reorients around the current reality. So now it's like, well, how could countries not entirely have their own currency? That's just how things are now. Almost every single country has one, and even countries that don't have one, the handful of them use some other countries, larger countries, fiat currency. But again, that's we exist in this 150-year kind of speed mismatch where the telecom era that totally reset the board, and then really only in the past third of that century and a half era, so really the past 50 years, have we entered the full-on kind of ramifications of that era. which is the fiat currency era that we currently have now, where even when a currency fails, people rarely fall back to gold because gold is so slow and has all these divisibility issues. So they generally fall back, ironically, to a larger fiat currency that's still functioning. And another thing that's worth pointing out is, I mean, you can go on Twitter and find all these debates where they would say if Bitcoin gets big enough, the governments are going to ban it. And of course, there have been some governments that either try to ban it or restrict it or surveil it. Is still very popular, to even ones that have allowed it. And yet, it's important to remember that government is not a monolith, at least in most cases, as long as you're not in North Korea or some other cases. Generally speaking, the places we're talking about, government is not a monolith. Every generation or so, that there's rotations that occur. While not everyone has the divisions of power that America has, many countries have some degree of divisions of power, either independent courts or multiple legislative bodies, and basically limits on any sort of centralized power. In addition, power is generally easier to wield when you get the public, at least mostly on your side. It's kind of like plausible deniability. Whereas it's hard to do when you fully take the mask off and just say we're against the people now. It's often, for example, power is often taken in moments of fear, where you promise people security in exchange for some of their freedom. Or you say, what we talked about earlier, we're solving a problem for you. Hey, sometimes you don't solve that problem perfectly, but we're only human, and we're just kind of grifting off the side of it while we do it. But people still generally believe that things are being operated better than if there was no one. Whereas if you just come to them and say, we're going to reduce your freedoms because we want to, or because it's in our interest, that's when you're more likely to get widespread protests and things like that. And so one of the things that Bitcoin does is it's basically a decentralized Excel spreadsheet, more or less. It's backed up by various forms of distributed consensus that allow that to function for so long. And governments have now grappled with this thing for 16 years. People said that they'd ban it, and again, some have. But now we have a president, for example, that in his first term was pretty opposed to it. Now he endorses it. Maybe he's not fully philosophically aligned with Bitcoin proponents around the world, but he's kind of recognized the usefulness of it. I think there's pretty clear game theory here, where like people that were in kind of the Elizabeth Warren camp, that were kind of basing their identities or their brand around being anti-crypto or anti-Bitcoin. There's no money in that, whereas there's more money in supporting the candidates that would at least allow marginal freedom to keep interacting with it. In addition, and this is my last point for this kind of part, when we back up, there's like this global chessboard where even when politicians in a country are trying to pose things locally, they're still competing with other regions. And again, if you're not North Korea, then there's some degree of like mobility going on in most cases. Capital often doesn't want to go to places where capital is not respected. Brain drain happens where people that have capability or means try to leave places that are not conducive for them, and that other places are happy to have because they can benefit their economy. And so in a lot of countries, it's in their best interest to say, we're still going to have our own currency as far as we can get away with it. We're going to try to surveil things to some extent, but we're not just going to go fully mask off and just kind of impose arbitrary restrictions, because we want to be seen as a reasonable actor on the global stage where capital and people want to be. And Bitcoin benefits from that kind of global arbitrage that happens, where if one place decides to get all authoritarian, another place can say, well, we're gonna allow more freedom. And there's already hubs around the world where it's been endorsed in some capacity, and they ebb and flow over time, but there's plenty of footholds. And then we've already seen this for decades with the dollar, which is that the dollar finds its way into all these different little currency monopolies. The leaders aren't always thrilled about it, but there's generally only so much they can do without going 100% mask off. And if they go 100% mask off, they often start losing the support of the people, which gets hard to maintain longer term.
Technology alters who has power, occasionally weakening government control over money. In certain countries, unstable currencies force citizens to convert to more powerful foreign currencies or digital assets. Even wealthy regions, such as parts of Switzerland, accept Bitcoin for taxes. For over 50 years, most nations have used fiat money rather than gold. When local money fails, citizens frequently pick another country's currency over gold because it is more convenient to use. Governments attempt to regulate Bitcoin, but their power is limited, and public opinion matters. If one government limits cryptocurrency, others may become more accommodating to attract capital and talent. Bitcoin benefits from this global competition, finding support where the rules are more favorable. Let's go back to the interview and watch more clips to gain insights from Lynn Alden.
I would say that Bitcoin didn't change its narrative. I mean, from the beginning, there were people pointing out its store of value properties and its medium of exchange properties. It's been used as both from the beginning. And I actually had a recent article on this, which is to say that, people often, they separate, again, this is time dependent. So they'll say, because in its first 16 years of existence, really bootstrapping from zero up to now a $2+ trillion asset, to say it's not money because it's not ubiquitous exchange. In the global sense, in order for it to be ubiquitous exchange, it'd have to be like 10 times bigger than it is now. It's a $2 trillion asset. And one of the points I made in our Twitter thread, was it's already better portable liquid capital than, I would say 170 out of the 180 fiat currencies out there, right? So the Egyptian pound is worse money in New Jersey, I would say, than Bitcoin is, meaning that it's harder for me to spend Egyptian pounds than Bitcoin. And that's not just because Egypt is a developing country, because it's similarly hard for me to spend Norwegian currency in New Jersey. It happens to be a small, wealthy country, no network effect that extends here. And so when you think of assets you could bring globally that have monetary aspects, Bitcoin is very high on the list. Physical dollars are high on the list. Gold coins or silver coins are high on the list. Bitcoin's high on the list. A couple other currencies like euros or pounds are reasonably high on the list. And it drops off really quickly after that. There are certain assets like a Monet painting or even Apple stock that have virtually no utility as money, either because they lack divisibility and liquidity in a painting's case, or as Apple stock, it's very hard to actually give it to someone else, until ironically it's tokenized in the more recent time period. But before tokenization, there's no way to transfer Apple stock to someone else, and even then, it'd have all sorts of frictions, and it would rely on a chain of credit. And now we exist in a time where there's a spectrum of how much monetary aspect something has. So something that's like a painting has basically zero monetary value other than this a liquid store of value that can be self-custodied. Company stock is also not very monetized. Real estate is not very monetized in the sense that there's very little capability to actually use that to exchange value. But when you go toward things like silver coins, gold coins, or Bitcoin, then it starts having pretty significant monetary properties. And even though there's no country where there's enough density, like a top-down monopoly, so far, at least in the first 16 years, it still ranks pretty high globally for places you could use it. And I mean, I'm not sure if I assume Mark has bought and sold things in Bitcoin. I have. There's multiple countries where I've bought things using Bitcoin, and then in addition, to avoid the irony, I sell broken money in Bitcoin, at least as one of my distributor options, to avoid the joke that you only sell broken money for broken money. So we've had significant sales globally of my book in Bitcoin. There's not been really any requests for people to buy it in gold or silver, and there's really obviously it's hard to do that online. There are some credit ways to do it, but there was demand and requests for people that want to buy it in Bitcoin. So we met that. And then, when I receive that Bitcoin, I hold it. It's not something I immediately sell for something else. I hold it. And so we can debate like philosophically what is money. But the few things that I've used in my life for money are, one, fiat currencies, because I'm born in this era, and two, Bitcoin. There are some Bitcoin proponents that use that same line of reasoning and say we shouldn't call it money, we should call it something else. And there are other Bitcoin proponents that would disagree with them. I think that it's important to separate whether or not something has the functionality of money versus whether or not it's currently used widely as money at the current time. So, for example, fine art, even regardless of whether people are using it as money, there's no world where it could be used as money, at least without abstraction and credit, things like that. It just the physical properties aren't there. There's a reason why gold and silver evolved as money, and most other things did not, because they actually have intrinsic attributes that make them better monies than other things. And so Bitcoin was, first of all, it was designed to have monetary aspects, and two, it does have monetary aspects. Now, again, it's bootstrapping from literally zero. There's no top-down enforcement in the world to make people do it as money. So it's just purely cross-border kind of global thing that competes with those other top monies as kind of portable capital. I've generally argued that medium of exchange usage, at least at a wide scale, would take a very long time, and that right now, basically what it is portable capital for the most of its value, which is to say it's capital that you can hold, that's liquid, rather fungible, and that you can pretty safely self-custody and bring globally in many aspects, which is a very novel aspect. And then you can find ways in those jurisdictions. You can't always buy your burrito with it, but you can usually find someone to exchange with you with liquid capacity, and then go out and buy the burrito, whatever the local casino token is for that particular jurisdiction. Because that's kind of what fiat currencies are. They're these little tokens that are issued by the local authority. Now, but because Bitcoin has these attributes, it actually also can directly be used as money, which is harder for gold and silver in the modern time. And so I think one is people argue that it has the physical capability to be used as money. There's the base layer, there's Lightning on top of it, there's Chaumian eCash now that's built on top of that. Of course, people can also exchange, collateralized credit representing Bitcoin if they want to. There's this kind of full stack ecosystem that allows it to be used as money in various forms. But again, it's up against a very strong network effect. And then, often the Venn diagram of people saying it's not money and people saying that it has no value or shouldn't be held, there's a lot of overlap in that Venn diagram. Not 100%, because again, there are people that like Bitcoin as an investment that don't like to call it as money, or either philosophically don't believe it or think it's more convenient not to label it like that. But often the claim that it's not good money is used by people saying that it has no value. They're saying, well, why not use something else to store value? Why not do other this? Because Bitcoin's failing in that one regard. But I would point out, Bitcoin is the most liquid, divisible, fungible asset that you can bring with you globally at scale, which is much harder to do with other investments, much harder to do even with physical currencies or precious metals of other types. And so it has these monetary aspects. And over time, it can get, as it gets larger and more understood and more liquid and more ubiquitous, it can keep inching up. So in the United States, people talk about the Second Amendment that way, but then even in the other types of armament, it's tools. It's Bitcoin. It's also things like communication processes. There's a reason if you read the Communist Manifesto, when they talk about how to implement their communism, they wanted to centralize all money and communication because they correctly viewed that as a challenge to what they want to do. And so things that provide decentralized alternatives that exist and that are robust make it pretty hard for them to have a complete monopoly over those things.
Lynn Alden pointed out that Bitcoin's narrative around being both a store of value and a means of exchange hasn't actually changed since its creation. She explained people often say Bitcoin isn't real money because it isn't used everywhere, but it's already more portable and usable than most of the world's 180 national currencies. For example, it can be spent in more places globally than currencies like the Egyptian pound or Norwegian krone, especially outside their home countries. She emphasized that only a handful of assets, including physical dollars, gold, and Bitcoin, consistently rank high for portability and monetary features. Assets like company stock or real estate may store value, but they lack the liquidity and divisibility needed for money, especially across borders. Bitcoin's digital nature, divisibility, liquidity, and the ability to self-custody make it unique. In her view, though you can't always spend Bitcoin directly, it's increasingly easy to swap for local currencies or use it in peer-to-peer trades. There's a growing ecosystem on top of Bitcoin, like the Lightning Network and Chamayan eCash, giving people more ways to treat it as money. Lynn Alden reported that, over the years, some critics avoid calling Bitcoin money, usually when arguing it has no value, but she believes its global liquidity and portability are unmatched. She has personally received Bitcoin for her work, including book sales, and simply holds it, treating it as money in her own experience. In her view, the technology's open and decentralized design challenges centralized control and naturally makes it a powerful monetary tool. What do you think are the most important qualities that make something money, according to Lynn Alden, and does Bitcoin meet those standards? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.